Hey, Brian Hoops from Midwest Market Solutions with our WASD Supply and Demand Report webinar. It's Friday, September the 11th. The report was out earlier today. Market has digested and traded it. The FSA report came out after the markets closed. We've included the numbers there in our analysis today as well. The FSA report showed how many acres were abandoned or prevent plant, how many have been certified, and we are looking at a little bit smaller acres as far as what we had expected. It doesn't significantly change the balance sheets, but it is less than what the trade had expected. So we're going to take a few minutes here and go through a few slides that deal with the report. And I want to say thanks on behalf of Midwest Market Solutions for tuning in and taking the time to look at this marketing webinar. A little bit about our company. We have 11 licensed brokers and offices in many different states, including Iowa, Missouri, South Dakota, Nebraska, Minnesota, North Dakota, and Montana. And we're a brokerage and advisory service. We clear our trades through the oldest clearing firm of the CME, that is R.J. O'Brien. Founded in 2002, so we have been around a while, stood the test of time. And if services available, we have, as I said, brokerage services, full and discount brokerage service. You can also have your own trading platform with market quotes. We have our hedging program, a daily newsletter, our trader newsletter, weekly newsletters, as well as our audio and video commentaries, Twitter feed, text marketing service. As I said, we are a full service brokerage office. All right, so looking at the report here, one of the things that I guess would catch my eye is the average trade guess almost nailed the numbers from the USDA. In fact, if you look at this yield number here, 51.9, that's exactly what our office submitted as our guess. So we were right on the money with that number. The harvested acres, really not much to change. Harvested acres for corn, almost exactly a number here. And it gives us production numbers. You can see this production number, it was larger than the trade guess, and for both corn and soybeans. So from that standpoint, this is not a bullish report. Yields did come down from last month, just completely as expected. And these are numbers compared to a year ago. Yield at 178. In fact, this is a new all-time record. We'll look at some historical numbers here in a second. That's an all-time record, well above last year's number. And for soybeans, this ties the all-time record. And again, well above last year. We're going to produce a much bigger crop. Now, in August, this would be these numbers here that we were talking about, the August numbers. The reaction was pretty bullish. We had an outside day reversal to the upside, despite some real bearish numbers, and the USDA, the reaction tells the story. The market reacted today to a bearish report by closing 18.5 higher in soybeans, 3.5 higher in corn. So there's nothing bearish about the technical action in today's marketplace. As far as ending stocks go, we're finishing up the 1920 marketing year. And stocks, not much different than the trade expected, not much different than last month. Soybeans did drop just a little bit. Corn numbers were actually up just a tiny bit from last month. And, these stocks here at 575, 600, somewhat burdensome, but this new crop marketing year at 460 is down significantly from that, even with a record soybean production, and has a chance to get even tighter. This corn number, I think, is going to be burdensome and kind of an albatross around corn prices. They did not make any changes to the wheat balance sheet, as we'll look and see. Wheat world numbers were a little bearish. We'll take a look here at that in a second. Corn production from Brazil, soybean production from Brazil, virtually no changes. Slight increase in corn from last month. In Argentina, no changes from a month ago. World ending stocks, something caught my eye in here. Kind of ignoring this, and look at the new corn numbers here. 307 million metric tons. That's down significantly from a month ago and below the average trade guess. This was friendly. World ending stocks for soybeans down from last month, kind of in line with expectations, but I thought overall a little bit friendly as we are growing a very large yielding soybean crop this year. South America did well in their production, as we just saw. but yet our stocks got a little bit tighter on a worldwide basis. Wheat, I thought, was bearish compared to the trade estimate, compared to last month, and certainly compared to last year. That's why wheat futures ended with losses today of about 6 cents in Chicago, 3 in Kansas City, and Minneapolis. All right, look at corn production in here. They did make some changes in this balance sheet, and we're going to talk about that. So yield came down 3.3 bushels per acre. Our office was at 178.2, so we're very close to what the USDA said. And then also noticed harvested acres came down in this report, and we have another graph to talk about reflecting that. So overall, our production was down, even though our carry-in stocks was a little bit up. Overall production was down. Now, most of the demand side is going to show some red in here. Feed and residual, use for ethanol, total feed seed, industrial use, and domestic usage down 200 million. The only positive export number was exports, 100 million bushel gain, and that gave us total demand usage of a drop of 100 million bushels when you net all this out. So ending stocks did drop from last month because of the production loss by 253 million bushels, but this total usage number is not where we need to be. We need to be stimulating demand, increasing demand, and the USDA thinks we're outside of exports. For some reason, they thought exports need to be upped a little bit. Outside of that, all our demand indicators are a little soft for this corn market, including ethanol, which is our biggest user of the crop. So surprisingly, they jumped the farm gate price despite this huge carryover number here, 2.5 billion bushels. This is kind of look at the production numbers on a different scale. This is our column here of what we thought. We were at 178.2, so we have the crop just a little bit smaller than what the USDA says. Demand really not that much different. I actually have a little bit more usage. I think the exports could be increased a little bit, maybe some feed and residual increased a little bit, as I thought we had more livestock on feed here. So I have carry out at about 2.427, still a burdensome number, and a stocks to usage ratio of 16.5. Last year, that's kind of where we were at, same things. Last year's stocks to use ratio 16.5, but our ending stocks are almost 200 million more than a year ago. So I'm thinking we're stretching this rubber band as we close up near 370 a bushel on December corn. I don't know that we're going to be able to sustain that price level for much longer. You look at our carryout going back to 14-15 here, and this is a much larger number. It's a much larger stocks to usage ratio at any time as well. So even though our usage is pretty good, almost record large here, we're just not able to chew through this big supply number. And again, this is our average yield going back to 14-15. This would be a new all-time record if this is realized, this 178.5. Corn ending stocks here. I don't know why RJO didn't put the USDA number on this for this marketing year, but you can. But I put this on here because they're at 2.5. That's up here, and we've never been that high before. Going back to 88, 89, we've never been this high, this burdensome with corn stocks up into this range up in here above this dotted line. This is a good graph. This shows our corn acreage production, and this is Iowa. We lost about 550,000 acres, and this is going to be due to that windstorm that went through central Iowa. And so you had a dramatic change in acres here, and that is reflected in the balance sheets. They also dropped Iowa corn yields by 11 bushels per acre down to 191. In fact, one of the few states that showed an increase was Minnesota. They're at 200 bushel an acre. That's up 3, and Illinois was down 4. Kansas was down 7. And Missouri's a pretty good producer. They're down 6 compared to this is compared to the month of August. So that's how they dropped yields by 3.3 bushel per acre. This will change. This 178 will change. There's some people who think it's going to go down. There's still debate out there that this is going to go up. So that's how you have to place your bets. This is what we're going to trade the next 3-4 weeks while combines really get rolling, is these yield numbers. I think we're going to have maybe better than expected yields, and this number could go up, but that's early indications of what we're seeing so far from producers. Looking at soybeans here as the clock continues to tick. For soybeans, planted acres really no change, no change in harvested acres, but our yield numbers did come down just slightly. So 51.9 is the yield. And changes to the balance sheet, production is down 112, as we saw. Ending stocks also dropped 40 million. So that's a boost to the balance sheets, and our ending stocks dropped 150 million as a result. Interesting, we've had all this export business to China. They did not make any changes. 2.125 billion bushel export number compared to 1.680 this last marking year. They're already factored in about a 450 million bushel increase compared to last year. And they, at this point, didn't feel a need to change that, as China is booking beans through January and early February. Farm gate price jumped dramatically from the 610 million bushel ending stocks of last month to 460 million. This is a more manageable number, as we will see in further slides. So this is where we have factored in the planted acres numbers as well as harvested acres. So USDA we're lowering these a little bit, and we're coming in with production just a little bit less than what the USDA had. But as far as carryout goes, not much different. Carryout at 439 million bushels, there at 461. Our yield number was, as I said, pretty much right on the money. But we have exports up a little bit because of the strong demand, and crush, may start to taper off just a little bit. So, as far as yield goes, this ties 2016 to 17 as our all-time record number. And if we start looking at ending stocks compared to history, well, there's been some years back in here where numbers were certainly tight, and then there was 18, 19, and this last year where ending stocks were larger than this. But stock to usage ratio is starting to get a little tighter, right around 10%. Here we had 23% and 15% last year. This is not bullish. This is getting more bullish when you start talking 5 or 7%. And right now we're looking at 10, with a possibility that that could tighten up even further if yields are not there. So market accordingly. Ending stocks for soybeans, this is another chart graph here. USDA is right in this area here. So it would be maybe the third, fourth largest carryover on record. So kind of comparable to 2005 and 6, where we had about the same amount of ending stocks for soybeans. And wheat, no changes to the wheat balance sheet, so we can go through this pretty quickly. There's a small grains report at the end of the month. That will be a key focus for the wheat producers. But we look at these balance sheets. Let me go back to the balance sheet. We have carry out about 932. USDA is at 925 today. Huge stocks to usage ratio. This wheat market's really, I think, going to struggle. This 975 million is our export forecast. That's probably an optimistic forecast, right, based off of how demand is right now. I think there's reasons to think that demand will soften as the year goes on. So some strategies in here. There's no carry in new crop soybeans, so you want to sell for fall delivery and look to reown. So there's no incentive to store these soybeans from a financial standpoint. And that's how I am looking at things, not from an idea, do you think, hey, beans could rally into the summer months because of China demand? I'm looking at it from a pure financial standpoint. November beans closed at 997, March beans at 998. Well, you can't store soybeans from November to March for half a cent. There's a cost in that, and that doesn't make any financial sense to hold on to them. Even go out to July, we're at 996. You're going to lose money if you were to hedge things or sell things today and put it in the bin and store it till July. You're actually losing money on the board, and you're losing by hanging on to the product here. So the strategy is to sell for November delivery and then buy back in some of these from farther out months. 2.5 billion bushel corn carryout will be burdensome this winter, so look to hedge December and roll it to July when it reaches full carry. So right now December's at 370. July is about, so if we get a break in values, that the July will not drop as far as December will, and then that spread will widen out. That's when you can roll your hedges. and Canada, all producing more wheat this year. Have a great time, and thanks for watching, everybody. We do appreciate your participation. Give us a call if you have any questions on this